Morning, traders. Happy Monday to you. Welcome to the F.A.C.E show. This is Blake. Hope everybody's having a great day. I know it's a U.S. holiday today. Things are a little quiet, but that's not going to stop us from broadcasting today. We want to make sure we get you prepared for the trading week. And this is a great day to do it, despite it being a holiday. So hope you guys had a great weekend. It has been, well, I don't know about you guys, but I had a fairly fun weekend. I was out doing all sorts of stuff. So hopefully you guys got to do it as well. The weather's been great over here where I'm at, but I tend to complain a lot in the summertime because it's so hot here. But right now it's great, and so we're taking advantage of it fully. This is going to be a busy week as far as data goes. Today it might be President's Day. It's a U.S. holiday. It's a Canadian holiday as well. And then, it's Chinese New Year tomorrow. I believe tomorrow Chinese New Year starts. I think it's on Tuesday. So happy Chinese New Year to any of you that do celebrate. As far as this week goes, we have a lot of data coming out because, first of all, we have Canadian CPI tomorrow. We have like UK jobs tomorrow morning as well. RBNZ is going to meet on Wednesday morning. And then we have UK CPI on Wednesday. We got durable goods on Wednesday here in the US. We have meeting minutes. Australia employment on Thursday morning. And then on Thursday itself, we're going to have unemployment claims here in the US. We have a lot of like Fed speakers that day too on Thursday. And then we have pending home sales, which, believe it or not, we're going to have to watch pretty carefully here in the U.S., because the housing market is so important to the consumer here in the U.S. Then on Friday, we have UK retail sales. We have PMIs out of the Eurozone and the U.S. And then on Friday, we have a ton of data here in the U.S. We have advanced GDP, PCE price index. Then we have PMIs. The GDP that we're getting in the U.S. is advanced GDP, so it is going to be a bit of a market mover come Friday. So once we get towards the end of the week, it's going to be a really, really busy week as far as data goes. Now, as far as markets are concerned, we're not seeing too big of a move right now, but I do want to just highlight the move that we're seeing in Bitcoin. Bitcoin's actually making a little bit of a recovery at this moment. It's something that, obviously Bitcoin's been under a lot of pressure, but, and I'm not even worried about it unless we get above 72.5 or 74,000, because you have 72,500, which is right here. It's previous highs from, I guess that's last Sunday. Yeah, it's been exactly a week, but that's resistance. But the big resistance is going to be 74,000 because that's a big breakdown point. That's the major level. 74.4 is the number that we're actually looking at. But it's getting a little bit of a recovery, at least this morning. One of the other things that's happening right now is we're seeing some yen recovery, or I should take that back, yen weakness. Which we saw yen strength all last week. That's one of the things that I think everybody should be paying attention to, because we have had such a big move in the yen, but really it's this rising trend line here that comes in around 152. If that breaks, I think that's going to bring in a lot of yen strength. And yen strength, a lot of people equate it to, a carry trade. And as I mentioned it in the week ahead video, I'm not so concerned about the carry trade. The carry trade is not as prevalent as it was in the early 2000s. I think you got a lot of traders that just recall the early 2000s and realize when all the yen pairs come down that there's some big carry trade unwind. There isn't, because interest rate differentials between the U.S. and Japan are not that different. Yeah, in the United States, we have, rates at 3.75%. And in Japan, they're less than 1%, but it's only 3% between the two. And really what drove yen carry trades back then is that you had Japan at 0, and you had countries like Australia and New Zealand that had 8% or more interest rates. And so when you have an 8% difference between two currencies, yeah, there's going to be a carry trade. That's kind of what we're seeing in the emerging market currencies. Those are the ones that you should watch. If you really want to be concerned about carry trades, you should be watching the what's happening in the peso, specifically the euro pace or euro pay, Mexican peso or the dollar max. But that doesn't mean that positioning is not poor in the yen. And that's the thing. That's the point I was trying to make in the week ahead video, or that's the point I was making in the week ahead video, is you have these currencies like the euro yen that has been really just, you know, the yen's been moving lower against the euro for literally years. And same with sterling yen, and same with Aussie yen, and Kiwi yen. By the way, Aussie yen has a nice false breakout if you guys haven't seen it. Um, there's since it's been so yen specific, these trades, yeah, there's probably a lot of stale positioning in there. So if we do see a reversal and we see the yen really strengthen, you might actually see these yen pairs roll over aggressively, and that's probably due more to positioning and not so much an unwind of carry trades, if you will. Um, I'm not sure if Ryan's going to come in today, but I know K-Man's here. He was traveling last week. How you doing, K-Man?
Hey, Blake. Hello, everybody. Yep, doing fine. Thank you, mate. Thank you.
All right. Well, welcome back from Belgium. So how was your trip?
No, it was good. But then the comeback into the UK always goes paired with a downpour of rain. And Ryan was reminding us, apparently on the Metaphys, they said that it's been raining in our county, Dorset, for 70 days on end. Which is
Really?
Yeah, which is quite abnormal, but
70
yeah,
days?
it's been an absolute downpour. And yesterday, driving back from my home country, actually, by the way, it started to snow over there, but we left just in time. But here it was just pouring down with rain, as it usually does over the past 2 or 3 months.
Okay, well that's pretty insane. I think the most cloudy days that we can put
Mhm.
together at once is about two here where I live. We get like two cloudy days, and it's like, oh my God, the world's coming to an end where I live. But then again, I live in the Valley of the Sun, so that's why they call it the Valley of the Sun. So you made it back,
Mm,
and you had probably a chance today to really take a look at well, we were just talking about the yen.
yeah.
What are your thoughts? Because you obviously, since you were gone on Thursday, and
Mm,
I'll zoom in a little bit here on some of the yen pairs. You've seen a really big move in the yen
yeah.
in most currencies. I mean, you got the pound yen that's obviously slid. I think when you left, you probably left when they started, and then you've been gone for a few days. So what do you make of this big yen move?
Well, I think we are coming out of and I spoke about it on the Flow Show too. We're coming out of the first the start of the honeymoon period or the wedding period. We had a really nice wedding, and everybody was so happy for Takaichi. So the yen strengthened, buying what she is planning to do, bit of in the mix. Not really sure how they're going to fund it, but there were those rumors about using maybe non-conventional for Japan ways of funding tax cuts, etc. So the market was uh, happy about it for the yen getting out of positions. And then I think what happened on Thursday was a bit of good old-fashioned risk off because the equity markets tanked at the same time, right? There was some worries about AI funding, and I think we had an acceleration on all the yen pairs, especially those very close to risk. And then you're calling about the right ones there. The Aussie yen, we saw quite a big drop in the Aussie dollar as well. We saw cable coming under pressure as well. Those are risk currencies. And I think waking up this morning, obviously the US being closed, the markets are more stable. And we are seeing a little bit of a stabilization, I would call it, in yen pairs. It's not a reversal by any means, but stabilization. And I compared it to, we had the wedding ceremony, you had the cocktail party, and now we are going to go to the banquet, and the banquet is going to have to tell us what Takaichi exactly wants to do. And I think in this period now, this first leg being done, we may see a bit of a period of stabilization in the yen pairs, I would say, unless we get another sharp drop in equity markets also, which is going to take all risk down. But yeah, I would rather say we may be starting to move a little bit more sideways. The interesting thing is that we have a couple of really decent levels, and one level in particular is the 152 in dollar yen. And we've seen over the whole period of the yen taking back strength. So we saw it after the round of rate checks. We stopped right in front of 152, and we saw it after the confirmation of the Takaichi's election and the landslide victory of the LDP, and we stopped again ahead of the 152. So that's really going to be the big level for the markets to watch, because if that would break one day, it's probably going to drag everything with it. All the yen pairs will probably go down, but it had held. So that is one thing that we need to respect right now. And then I was looking at what the Japanese are looking at, and that's the clouds, etc. And if you stick a cloud onto the daily dollar yen as you are there, you see the underside of it is around just before 155 on, and that's around that green line there. And that's going to be the more interesting level to the top side. If we see consolidation, it should, in theory, stay below there, because we've seen those levels being a bit of bottoms before the setback started. So that, I think, is going to be the top side level, which is also the underside of the cloud right now, and that's going to be the other side of the range. And the other pair that I'm really looking at for the yen, I call it the representative of the non-dollar yen pairs, is the euro yen, because the euro yen hasn't entered its daily cloud. You can leave the cloud on there, maybe take the daily on, stay on the daily. And if you look at the daily, if you go back onto the daily, right. Yeah, your ABCD is a little bit in the way there. But since April last year, we haven't traded inside the cloud. And last week I highlighted that, I think was on Wednesday, we entered the cloud again, and we are now inside, which could also tell us that we are maybe going to range a little bit. It's obviously less bullish than what it was for months. As you rightfully said at the start of the show, Urian has been bid for months and months on end. So now we are more in a sideways, I would say, for as long as we are in the cloud. But there is a very big level to the downside, which is going to coincide roughly with 180, call it 180 and a half. But so that's going to be the other side, the psychological one, because if euro yen one day breaks under 180, psychologically, some of the traders will start to feel a little bit more, I think, positive towards the yen, negative towards all yen pairs. So I think that's the situation we are in right now. First leg of yen strength may be done, and now we will have to see what's going to come out of all the rest. I see AJ talking about Japanese Prime Minister meeting Bank of Japan. That's a usual meeting. They meet very regularly. Not a lot has been discussed. Ueda said that Takaichi didn't make any specific demands, so moving on from that one. But so that's a bit how I look at yen pairs right now. First big leg of yen strength done, but very strong levels of support are still holding. So that puts me in a bit of a holding pattern right now.
Yeah, when you're talking about these yen pairs, just to highlight some of the things that K-Man's saying here, like about the euro yen, 180 also coincides with 161% extension of the last time when we hit all-time highs or most recent trend highs in the euro yen, and I believe that was an actual all-time high. The 161% extension comes in at 180. channel support at 180. You got the bottom of the cloud right there around 180. So, and being such a psychological number. And then I want to go and just to reiterate, let me get rid of the cloud here. Whoops, that's not what it. Let me go put that cloud back. I get rid of it. And then with the yen, just the dollar yen, excuse me. That 152 level, it's obviously the low from here. It's also a rising trend line. It's also the 38% retracement. One of the key components of a 38% retracement is it usually defines an uptrend or a reversal of or in this case, a trend or a reversal of a trend. So in other words, if you hold and I'll just draw it out for you. You have a trend that's moving higher, right? In this case, and then you reverse and you get to the 38% retracement, which is again at 152. That defines that, oh, we're in an uptrend and the next move should be into new highs. If we break that, then anybody who's long really are now going to start looking for a much deeper pullback, whether the 50% retracement or the 618 or 78% retracement, whatever happens to be coinciding with the move, from a macro point of view or some fundamental reason why it's pulling back. These targets may vary, but it's really the 38% retracement right here, which happens to be at 152 and coinciding with this rising trend line, that really makes a difference. And that's why it's such a big level. Then you're also making lower highs, lower lows, which is a definition of a trend reversal. When you already have lower highs, then you add lower lows on top of that, you then have an actual trend reversal. So that makes these levels so vitally important as we move forward. Now, one of the things, and I'm going to talk a little bit about risk, and I want to talk about stocks. The equity markets, as you guys have heard us say about 1,000 times, we are at channel resistance, like long-term channel resistance. You have multiple Elliott wave counts that take us to where we're at. And the interesting thing is we have been stuck literally up here within about, roughly 2-3% of, this completion or channel resistance, you can call it. You think about the range that we've been stuck in, just a couple percentage points. Is the market ready to roll over? I think it is. But are we rolling over yet? No. And it's been very frustrating. It's frustrating for bulls that are wondering, why can't we hit new highs with all this investment in AI, with the Fed looking to cut rates? Why aren't we trading above 7,000? It's just as frustrating for them as it is for people like myself. Like if you go look at patterns in play, I've had this short S&P at the 161% extension since January. Since last month, I've had this pattern in play in. These yen pairs have been in place since last week, but this has been a month that I've been sitting here waiting for this 161% extension to roll us over. It hasn't, and I think the equity markets are going to need a catalyst, and that's why this week's week ahead video I highlighted Bitcoin was the first catalyst or first mover. Then you had silver, which was a very, very risk sensitive trade for the market. Everybody was very long silver. It was a big breakout to all-time highs above 50. It was FOMO. Everybody's chasing it. You had housewives, melting down their silver, forks and knives, trying to make them into bars. I mean, all sorts of crazy shit. So as a result of that, you've seen all these high beta moves just kind of get blasted over the last couple of weeks. Then last week, you saw the yen show reversal. These are all signs that are suggesting that the stock market's getting a little tired up here. That when you start to see a lot of these, assets that have been really moving start to reverse, you have to start being really careful when you're talking about, equity markets. That's why I believe that you got to watch the S&P carefully here. It has not told us that we're breaking down yet. It has not. But if we start breaking through some, 6,700 level, we start breaking through some of these key supports, then I would be more concerned with the way the market's behaving. But right now it's still holding up, and maybe it is that below 152 in the dollar yen that might be one of the early signals that the equity markets are rolling over. A couple other things, we've seen the precious metals really stabilize here, K-Man. Like
Hmm.
gold, it's sitting around 5,000. I keep hoping we get up to 5350 because that is that Gartley pattern setup. That's what I'm really hoping for. I just don't know if that's going to happen. I sit here and look at gold and I'm like, I think we're going up here, but I wouldn't be surprised if we traded back below 4,500 first. How are you feeling about precious metals where they're currently
Well,
trading?
yeah, I spoke about it this morning as well, and on my BT updates in our community. The old tradition said that gold was putting in highs, running into and over the weak Chinese New Year period.
Which is tomorrow, correct?
Well, it
Starts
is
tomorrow.
tomorrow,
Yeah.
but
Okay.
usually during that week, gold puts in a high. Because I mean, we know China, it brings luck to offer golden stuff to the family, to kids, whatever. So there's always this demand. It hasn't really been that pronounced, although we have seen some gold demand again. But I'm going to be curious to see how we come out of this week. Obviously, we are going to have data which are going to impact yields, which are should be impacting gold as well. But it hasn't been as clear cut as former year tradition may have been. So I'm quite curious, and I'm really, Blake, just looking at levels. Yeah, your 53 is going to coincide with that 78.6, right? Around that 53.50 there. Um,
Correct.
yeah, exactly. And but I don't know if gold has the elasticity, I call it, or the power to get up there right now, because it's I think if we would have to go there, we may have already been a bit closer, especially when as you experienced last week, just while I drove off, that pretty sharp equity market sell-off. That should have been a factor to actually put a bid on the gold. And actually, we saw last Thursday it went the same direction before recovering. So yeah, I don't know if we are going to get up there that easily. We are going to have to break back above 51, 51 and a half to even get a chance up there. So I think for now, I'm looking at rather a range. And there's 58, 48. I have it 48.90 figure to the downside, 51, 51.20 to the top side. You can trade inside a range as well, to start the week. And there's nothing against a little bit of range trading if we can pick $100 here or there. It's always nice to identify a range and to actually trade it, which may be actually, as you say, on the stock market too. For as long as you're above 6,700, buy the dip and sell the rallies.
Yeah, one of the precious metals that I don't prefer to buy the dip right now is silver. Going back to our talk about the 38% retracement, one of the big issues I think silver has is its shallow recovery. We have not been able to get back above the 38% retracement. Once we hit that fresh low at 60, around the mid 60s, we stalled at this $86 level, and silver looks really really heavy. You're in that kind of denial stage for precious metal traders. Let me see if I have I wish I had the chart of the different stages of a reversal and psychology. I have a very similar situation with somebody I know that knows nothing about the markets other than I'm buying crypto because um, you know I'm a Republican, and this is somebody I personally know. I'm a Republican. I'm buying crypto because the the U.S. Administration supports crypto. So here's a great example. Bought XRP, down here and bought a crap ton of it. He was up about 100 and I think it was up 150,000 at its peak last November. It was right around November of 2000. No, it was right here. Yeah, right here he was up about 150 grand. Then he was up like 200,000. Then he started adding at the denial phase, right? And he's watched his $200,000 turn into basically barely any profit. Again, somebody that doesn't know anything about the markets and really refuses to learn anything about the markets. He's just buying it just to buy it. The problem that you have here is you have a very similar situation with a lot of investors in the silver market. You get to a level where people are like, oh, I just want to be buying on pullbacks, not really realizing this has been a massive reversal. You start buying here, and next thing you know, you're trading at 50. And then if we break below 50, that's where the despair part starts. And then, that's how we end up trading back to the mid 30s before it's all said and done. So the silver, in all actuality, is just not acting very well. If you want to be long a precious metal, I think gold is the place that you want to do it. And if you want to, be short silver or short precious metals, I think you look at silver. Dale just asked, does anyone know what time U.S. equity futures finish trading today? You know who knows, Dale? Google. Google knows. There you go. So and actually, if you want to ask ChatGPT, GPT knows as well. Also, Gemini and several other. See, the thing is, as we get older, Dale, you got to start to learn how to the tools that we have available to us. Like, remember back in the day, people would say, "Google it, kids." Well, I know that being over the age of 50 or 60, you gotta conform to current developments. Today is a holiday. It's President's Day in the U.S. So with that being said, hey, I want to point out Bitcoin's kind of rolled over a little bit here. And speaking of Dale, Dale's going to be a guest of ours. I'm trying to think, Dale, what day is that? I have to go back and look. But today, yes, is a holiday, and I believe you're coming on Tuesday. I have to go back and look. I'll look here in a second. Actually, I'll tell you right now. Let's go check this out. K-Man, before we wrap things up for this session, what are you looking at?
For the start of the week, we do have, as you already
Thursday.
We do have that UK jobs report out tomorrow. And we will have, what is it? Is it on Wednesday that we have UK inflation as well?
Yeah, it is. It is.
Exactly. So we have
It is
2
Wednesday
days.
morning.
We have 2 days to closely monitor the sterling because, yeah, we have seen some weakness in the sterling. We have seen it start of last week, but then at least on the crosses, sterling has been doing quite all right since. So we're going to have to closely monitor what's happening with the sterling data to start this week, and then
do you think Starmer
obviously,
survives?
sorry.
Do you think Starmer survives?
In the end, no. But I mean, for now, he may last until May even. So until the local elections. But for the time being, we sterling is doing all right-ish. But if we get any negative reports there, it could get another slap around the neck, and that's rather the side that I'll be looking at. And then we have an interesting couple of days on for the Kiwi because RBNZ is expected to shed some of its dove wings and go a little bit more hawkish, but without moving the yields. And on the back of that, the next day we will have the Aussie labor report, which is Australia has been, Aussie dollar has been behaving relatively okay. It's actually been trading a lot in tandem with the S&P, I noticed. But it's been doing okay. RBA hawkish. The last jobs report in Australia was pretty was actually very good, and see if there's any changes there. So that's the start of the week for me. The first half of the week will be focused on those couple of things, and then yeah, I mean, second part of the week we will have like a plethora of data to look at, and perhaps on Friday, SCOTUS deciding or giving some opinions about Trump's tariffs.
Yeah, we'll see about that. We hope. Now, you guys know that it is expected that they are going to rule against the Trump administration. That is like the
But
expectations right now.
it seems that they're
So,
scared to.
what's that?
It seems they're scared to because they have already postponed it 3 times. So.
Right, right. Yeah, I'm sure they are. I mean, they're gonna have to take their social media lashings, when they do that. But the thing is those justices are gonna outlive Donald Trump. That's the bottom line, right? I mean, they have to survive the next 2 years, 2.5 years. But those justices that they're in it longer term than Trump will be. So they're probably just trying to do the right thing and make sure that they're making the right arguments. They understand that there's a lot of implications. By ruling against the Trump administration, you're going to end up unwinding a lot of what's already been done, and it's going to be very messy. And I think they understand that it's not an easy decision. I think, again, most people think that the Supreme Court is going to rule against the Trump tariffs, and but then the Trump administration is going to enact other ways of putting those tariffs back on. So it's just going to be a very messy process that it's more than just right or wrong or yes or no. The ripple effect throughout our economy is going to be very great. So I think that's where the conversation is probably at, versus we agree or disagree. It's what are the ramifications of our decisions that are being made. So anyway, well, with that being said, K-Man, I want to thank you for being here today, and welcome back from your trip. I know it was more for family matters, but good to have you back. And just remember, everybody, we'll be back to our normal programming tomorrow, which we're not abnormal today, even though it's a holiday. We're still going to have the Morning Edge in about 40 minutes from right now. We'll have the daily roundup. So if you're in the Forex Analytix community, you will have those shows to look forward to. So with that being said, K-Man, thanks so much for
Thank
being
you.
here. Yeah, appreciate it. And we'll catch you guys tomorrow. Make sure you're listening to K-Man and Ryan on the Flow Show tomorrow morning. So that's at 10:30 a.m. UK time. So make sure that you guys are tuned in there. All right, guys, have a great day. Thanks, everyone. We'll catch you on the Morning Edge in 40 minutes. Bye-bye.